You're welcome back. Recently, there was a headline on the total loan facilities the current administration has been able to access from the Central Bank of Nigeria. According to the news, the ways and means from the CBN to the federal government ballooned to 15.5 trillion naira, indicating that around 14.86 trillion naira was received by this present administration. Well, a look at the federal government's borrowing indicates more than 2,000% borrowings between 2015 and now. A lot has been said about the country's debt stock. More will be said this morning as we have Akintoye Oyelakun, investment analyst with Quadros Asset Management, joining us. Good to have you, Akintoye.
Thanks for having me. It's my pleasure.
Yeah. So recently, the Minister of Finance hinted that Nigeria would continue to borrow as long as revenue continues to underperform. What's your thoughts on this?
Yeah, so on that, there's no issue about borrowing. Most economies of the world, even the developed economy, do a lot of borrowings. However, the problem about borrowing is when you are not able to, pay back, when you're not able to service your cost, it has negative impact on the economy. Also, when you are borrowing for recurrent expenditure, rather than using the fund obtained for capital building, for strengthening the economy and supporting stronger growth in terms of economic performance, this is where the issue lies. So, Nigeria will continue to borrow, that's fine. However, we just only need to ensure that everything that was borrowed is effectively used and, used to drive the necessary infrastructure that we need to build within the country. So that's basically my opinion on that.
Right, so we keep talking about debt to revenue as a source of concern. Do you see any intentional effort to resolve this?
Well, as things stand, Nigeria's debt service to revenue has been very much high. Looking at the first 5-month data, Nigeria's debt service to revenue was around 98%, which is very much of a big concern. And what we have noticed now is that as against what we saw earlier in the year when yields are rising, we saw yields on fixed income instruments rising, across the short and long tenor and even the mid tenor. We are starting to see a reversal in that. At the last 4 or 5 auctions that have been concluded by both the CBN and the Debt Management Office, we are seeing a sustained decline in the stop rate, which kind of indicates the pattern that the DMO and the CBN wants to do now, in an attempt to reduce borrowing costs for the government finances. So we are seeing yields going lower, and we are likely going to continue to see that. However, that may not be sufficient, to bring down the cost of borrowing significantly lower from the levels which they are. So we need to have a lot of policies to drive investment within the country. Also, policies that is going to drive improvement in revenue generating capacity, which would then support our ability to optimize borrowing for the country development.
Well, yesterday, the DMO completed the auction of 150 billion naira bonds instruments across 2028, 2036, and 2050 maturities. Looking at the outcome of that auction, what should investors anticipate for the remaining part of the year?
Yes, so what we saw in the last auction, which was completed yesterday, it has been the similar trend that we are seeing in the fixed income market auctions generally. We have seen sustained decline in terms of stop rate, which is the yield that is attached to those maturities. We have seen attempt to reduce that. In the previous auction before the last one, we saw that the DMO was not willing to overload on some maturities, given the fact that investors were bidding high, at a high yield. In an attempt to cut down the cost of finances, we saw that the stop rate was reduced, and then the DMO did not mind not fully allotting all the bids that were made in that auction, and that was what we saw yesterday. So yesterday we saw investors bidding lower compared to the previous auction, given the pattern that has been observed in the market. And as a result of that, we saw that the stop rate, which is the yield on those maturities, it closed lower, indicating that we'll likely continue to see a downward trend in the fixed income market. However, again, when you look at the expectation of the Eurobond issuance towards the end of the year, this means that we're not going to see much of reliance on the domestic borrowing. This will also mean that there will be a lot of buying interest in the fixed income market, and we'll likely see yields sustaining a downward trajectory for the remaining part of the year.
All right, so this week, so far, the equities market, we've seen, mixed results. The domestic bourse advanced just by 6 basis points. What's your assessment of the market so far?
Yeah, so basically, our market has been on a positive note since the beginning of this quarter, and this has largely been driven by the earnings season. We have seen a lot of strong numbers from big names, and the likes of MTN, Dangote Cement. They have released very strong performance, and this has led to a lot of buying interest in those tickers. We have also seen some of the other major names that have released their results. A lot of positive results, a lot of dividend declaration. This has led to a lot of investors taking positions in the equities market. And looking at the rest of the year, this will likely continue on the back of the expectation that we are still going to see more positive earnings release for the equities market, especially from big names in the banking sector. So if that should come in and the results are very positive, we should see this positive momentum continuing. And also, when you consider the fact that the expectation is that the fixed income yield will continue to decline from the current level. So as we see more a decline in fixed income yields, the equities market will be very much attractive for investors. So we are likely going to be seeing, sustained buying momentum. Although we'll see some level of profit taking at some point, but overall, looking at the outlook from now to the end of the year, it is still very positive for the equities market.
All right, well, that's in spite of yesterday's negative, but considering the current performance of the Nigerian financial market, where are the opportunities for investors? You talked about the decline in yields in the fixed income and then, well, the positive sentiment in the domestic, but where should investors look to?
Yeah, so basically, like I mentioned, for the fixed income market, the bonds market, we are still expecting a lot of bullish sentiment to dominate that space due to the fact that we're expecting Eurobond issuance. So once we see a Eurobond issuance, it means that reliance on domestic borrowings will be smaller, and we'll see a lot of investors trying to take position now, to lock in on those returns, before it declines further. So the physical market is a very attractive market at the moment for investors who are looking at holding for, short to medium term. Also, when you come to the equities market, like I mentioned, what we have been seeing in the financial market has been a reversal in what we saw earlier this year. At the beginning of the year, we saw yields increasing and a lot of investors in the equities market setting up their position in the fixed income market. And now what we are observing is the reversal. Yields are trending lower and the equities market is looking very attractive. A lot of strong dividend declaration for companies half-year earnings release. This is expected to continue to drive the positive sentiment for equities market. So investors can look at those fundamentally sound stocks that are, declaring dividend at this moment and also that have, strong upside potential. This will help them to maximize their potential return. Also, beyond the Nigerian market, investors can also look at the Eurobond market. Yields are still very attractive at this level. And also, there's a need to look out for Nigeria's Eurobond issuance, which should take place within the remaining part of the year. Investors can also take advantage of that yield level, to optimize their portfolio return for the remaining part of the year.
All right. Thank you so much for the tips, investment tips that you just gave us there. Akintoye Oyelakun is investment analyst with Codros Asset Management, and enjoy the rest of your day.
Thank you for having me.